Quick disclaimer, these videos are meant for educational purposes only. Anything said or shown in any of these videos are personal opinion and my perspective. Trading carries a high level of risk, so anything done is your responsibility. Hey, how's it going, guys? Welcome back to mentfx, and it has been an absolutely amazing week. I've had my first basically double partial trade that's actually ran I think during this entire year so far, so about 5 months. I've only had either break-evens, losses, or just my first partial, which is usually 10 RR. So my plus fives were always secured on the wins. However, I haven't had any of those extensive runners, and I'm finally getting that right now. I got both partials, so I got one partial at 10 RR, one at 25 RR, and now I'm looking for the next 50 RR. However, the main reason for making this video isn't to show off any trades or anything, right? Again, this is like my first good trade of the entire year. I mean, I've had other great trades. Plus 5 RR is phenomenal, right? That's that. Usually I take off positions at 10 RR and then I secure half of it, which is 5 RR. And of course, because I trade the lower time frames, I take break evens and losses. And because it's such a low time frame, remember, a break even is more like a minus 0.3, minus 0.6, and a loss is not a -1. It's sometimes like minus 1.5, minus 1.6. But that's all factored into my own system, and it's no problem because those plus fives take care of that. And then when you have actual runners, it takes care of it even more. And of course, if we get this run above this high, that'll be about 50 RR in partial secured, minus whatever partials have already been taken. So it's not actually 50%, no shit. And I don't risk 1% as well, right? However, the reason I wanted to put this video together is because in the last few videos, you saw me harp and talk at large about the idea of if a market's long, you want to follow it long. If a market's short, you want to follow it short. And I also showed you great examples, basically webinars, right, from the private mentorship where we spoke about, how we're going to follow through on a move. I think we spoke about EU and how we're going to continue to look for ways to short it and look for those 3-box setups to keep shorting. Because what they're showing us is that there's some kind of smart money mitigation that needs to occur before a given continuation as per the structural narrative. And that structural narrative, as it delivers, if it delivers, right, is delivering to every single point that every dumb smart money or dumb retail trader is trying to basically long, right? Every single one of these lows acts as a very potent longing zone for a lot of dumb money. And what happens is as those longs are funneled into, they create stop losses, or they start creating liquidity down below them. And when you're very long on a short market, the main point, the main low, like this guy right here is equivalent to this guy right here, right? That's like the main low. That point is going to hold most of that liquidity, even though, people have stop losses placed throughout, because most of the dumb money is either going to, one, increase their stop loss infinitely, right, until they get to basically this low, or any large trades that are taken, or like if you're waiting for this break to take a breakout, you might be looking to place your stop here. Or if you're looking to take this breakout here, you're placing your stop from here. If you're taking to take the break and retest, you might be placing your stop here. This is the main area your eyes are drawn to, regardless of the timeframes you look at. So as those lows are created and they get ran by the normal structural delivery, that's the exact point that's getting liquidated, right? So, at large, we spoke about for the last few weeks nonstop, and it's all been prior to price happening. And of course, I speak about it before price ever happens in the mentorship. Then I deliver it to you guys here. Then I record it kind of actively as price is delivering. And then I post it over time so that, the public mentorship, the public YouTube gets a lot of the data after the fact, and it's all already happened. However, everything's recorded prior, everything happens prior, and everything's posted into the webinars, way before, because we have our webinars every single week. And similarly, this week, let's take a look at this. We've had a beautiful delivery, and just like we've spoken about over and over and over again, we are still looking for those longs, and it hasn't changed. The market's been long, so it should be long, and that's what we're looking for. And 80% of retail short on this, 80% of retail is long on this. There's no sense to it. However, that's just the way of the market, and every single one of these lows, regardless of if you're retail or smart money or dumb smart money, there's people that are looking to take these as springs, this is support, this is newly found lows as the real dip, start buying the dip, whatever it might be, and getting consistently liquidated and stopped out. However, today I'm just going to break this down because I had again, it's one of my best trades of the year so far, so happy to break it down right now. We're just shy of 50 RR right now. So yeah, we're like, what is this? We're just 8 pips shy of 50 RR, but I leave it because that's part of my system, that's part of my management system, and I let that run. Again, it's not actually 50% or 50 RR. I risk less per RR. My RR risk for 1 RR is 0.2%, and I take partials throughout the trade. However, this is going to be the first trade that actually runs 50 RR or more in this case if it hits this year. And honestly, I had like one other trade that ran 2 partials this year. So, you know, it's really cool to, you know, hit a runner now. So yeah. And the reason I wanted to make this is because it's in line with everything I've been teaching you guys for the last few weeks / months. Because remember, you know, this is May 13th right now. So this is the live price on May 13th. You're going to receive this video and it's going to be uploaded to YouTube a lot later. However, you know, just like any video, every week we've spoken about how this is going to remain bullish and how even in the mentorship, right? We've been extremely bullish as per the webinars, and anyone in the mentorship knows about this ever since these points here, right? This original break, the demand zone, the follow through. I'm not even going to draw it again because you can watch the previous videos, because it's important that you watch those before you move on with these. And then the beautiful markups, right? And these markups happen from even the bottom here, which was part of a weekly zone, started moving up, right? Gave you smart money entries using the 3-box setup. And continued and continued and did the same thing here and continued and continued, did the same thing here, and now it's in the form of continuing. And guess what we're trying to do again? We're looking for the same thing to occur here, hence the zone. I think it's an 8-hour zone, right? There it is. And we're still looking for the continuation. Why this zone? What's going on? Break of structure to the top side, box 1, right? You have an impulse, you have the next high, which is going to act as your next liquidity draw, right? Because what are you getting at these points? You're getting dumb money or dumb smart money that's thinking these are the completion highs or Wyckoff or a distribution or whatever it is. You have a lot of retail looking at anything to try to catch a move down. You're looking at retail looking at very long-term support or resistance or whatever, looking to at least trade price back into this area. So once again, about 80% or more of retail, or what we like to call dumb money or psychologically inept, is currently very, very short on this and have been short. And yes, they might be right finally. Maybe it does break down. However, you know, we've been long ever since, I believe, in here, but then in the mentorship, we've been long ever since this break here. And retail has been 80%, 70 to 80% short ever since that break, which means every single high that has ever formed, any high, even like these little ones here, are all retail positions or dumb money positions just getting continuously liquidated. So don't be that person. Continue to follow the actual structural end of what's occurring. Follow what's taught here on this channel, and then use that 3-box setup, the smart money setup, to get involved in actual setups and properly, you know, manage your risk accordingly. And you can get yourself to a very, very good place in your own trading. Now, the reason I wanted to make this is because, you know, we called this move out, of course. So we're going to open up the mentfx private mentorship right here. We're just going to scroll up to yesterday so you guys can see this kind of, you know, exactly what occurred. So I sent out this at about yesterday at 2:22 p.m. Today it's Friday, May 13th. So this means this was sent out at May 12th at 2:22 p.m. EST. And you can see I sent out this, right? You have that break. We have our zone. That's that 8-hour zone you see here. Why this zone? Because the last down candle is this one. And then you have the next bit of candles or volume come into it and then move away, which means, right, that's where all the demand was introduced before price ran. And you can also simplify that by seeing the fact that there's an imbalance here, right? Which means what? That this demand zone is valid, right? We do not teach order blocks plus imbalance. We teach only supply and demand. And the way you utilize supply and demand is not by looking for the last down candle, for the open of the last down candle, for multiple down candles, whatever it might be. We don't care about that. We care about looking between timeframes to see where volume came in and where it left an area so abruptly that it left behind an unmitigated portion of that move. Thereby meaning that if the range is to retain itself, right, from low to high, and it does, and it comes back to that zone, it is most likely mitigating the orders in there to continue a given move. What does any of that mean? What is mitigation? What is this crazy stuff that mentfx is speaking of? Make sure you look up mitigation on YouTube. One of the best, you know, a really good video I made. A lot of people received very well. Just type in mitigation mentfx. Just do that really quick and watch this video. An absolutely amazing video for you, about 30 minutes long, and you will understand everything as to why we trade supply and demand zones the way we do and how we interpret these zones. And, you know, if you want to go further, check out the link in the description or at the bottom of the screen. That's the mentorship, where I take this to basically its conclusion. There's nothing more to learn once you're there. It's in extreme depth across timeframes, fractal, and how to refine it properly, right? Because the way people view zones and teach how to view zones is very subpar across this platform. So that's the reasoning for that zone. We're going to break down the actual trade this weekend in the mentorship, as we always do, right? To keep you thinking, to keep you on fleek, whatever you want to call it. So scroll down here. You guys can see it started going up. Still no trade, no position, but showing us that it wants to make that. Basically, we see that this protected low on behalf of smart money is being bought up as it comes into the actual demand, which means whatever mitigation had to occur there isn't occurring just to possibly just push down, but it's occurring to actually continue a given move. So again, I'm still bullish to this. I might be wrong. If I am wrong, I've already secured a shit ton off this trade, like one of my best trades of the year. Like I said, if we get to this high this today, because it's a Friday, that'll be my 50 RR secured. So it's going to be absolutely amazing. Again, if you're new, if you hear me say 50 RR, please don't be taken aback. I risk 0.2% per trade, so I'm just going to try to break this down for you. 0.2% per trade. I take a lot of break-evens and losses. A loss is usually not 1 RR, so it's not always -1. A loss is usually like -1.5 RR due to commissions or spread, but I usually limit myself in, so it's limit orders. So usually spread is the only, not spread, sorry, the commissions are only the biggest effect, but that's about -1.5, -1.6 total. Break-evens are not true break-evens. Break-evens are not just 0 across the board, right? Break-evens are more like a -0.5, -0.6, and then on average, my wins are 10 RR, which means I take off 50, so I take about 5 RR off. Then I manage accordingly if there's a certain contextual element to the trade. Otherwise, I take off my 10 RR, then I take off at around 25 RR, then I look for good liquidity, like something on the left. So right now we're aiming for this 15-minute high, which just got taken. So really, there's going to be considerations made for closing. However, usually I hold to that 50 RR, and that's where I take my next partial. But that also means, right, that you have to be cognizant of the fact that not only is, that's not 50 RR. My first RR is 10, right, divided by the 2 for the first partial. So I make about 5 RR right here. So made about 5 RR there. Right, then you have the 25 RR, but 50% is taken off, but already 50% has been taken off. So I'm securing about 6.25 right here. So you can see why 2 partials for me is really good, because it cements about 11.25 RR on my own account. And then the third one, which is 50 RR, is going to take off 50%, but we've already taken off a 50 and already taken off another 50. So that's going to cement another 6.25, which is going to be phenomenal if we actually get that, but we're going to forget about that right now. So really, we've cemented about plus 11.25 RR total on the trade so far, right? And again, even though that may seem very high, subtract a few losses, right? So let's say 2 or 3 losses, subtract whatever break-evens you took, so maybe 2 or 3 break-evens, right? And you're talking about a 4.95 RR gain on the account just at these 2 partials. Now, 4.95 RR is not 5%, because once again, I risk 0.2% per trade. So, on average for the week, I'd be up 1% or more. So in this case, I think I had another plus 11.25. This was a really good week for me this week on EU. So I'm actually up a little bit more than this as well, right? So we can factor that a little bit later. So that's 4.95 plus the 11.2. But then there's also a few more losses. So I'm not going to add that all up, but the idea is just with the example here, plus whatever break-evens and losses were taken, let's say yesterday, not on UJ, but on like EU, any that were taken yesterday, get prorated to that. And we're talking about overall with commissions and spread and everything being factored very conservatively, I'd be up 1% on the account, right? So remember, just keep in mind that yes, you might see these large, whoa, he's doing plus 50, but remember, I have a lower win rate. The way I trade is the way I want, so I risk a much lower amount, and therefore this is what a 50 RR, if it runs to it, trade can look like. So it's not going to be 1%, it's going to be another 6.25 secured times that 0.2 as my risk plus the 1. So for the week, I'd be up just 2.2% or so on basically just this trade, right? That's what you have to think about this. So just recognize that just because you see these beautiful trades doesn't mean they're just at 1% risk, just fucking running it. BEs are no big deal because I don't lose anything. Losses are just fucking write them the fuck off. No, this is not how it works, right? This is what trading looks like. And regardless of whether you pick a higher time frame system or a lower time frame, there's ways you need to calculate around your bottom line to understand what you're doing. Now, that said, I'm going to break down this overall trade for the mentorship students this week. I'm not going to break it down on here because it's using some of the entry criteria is only taught in the mentorship, like double MB. However, right, we've been extremely long on this, and let me go here to the 15 minute so I can actually show you this because I forgot to. There's that 8 hour pushing higher. And because of that, I went to the 15 minute and we saw this beautiful break. So that beautiful transition from weak to strong hands, and the break above displacement to the top side. So we sent out this right here, and then I resent it with the entire black candle. So if you notice here on the 15 minute, this is what I sent. Here's that break to the top side. Again, we are bullish. We've been bullish. We're moving from a bullish area, and now we're setting up a 3-box system. The exact same thing I teach you over and over and over again on this YouTube mentorship, right? So make sure that you're actually viewing these videos and learning from them. So you have this down move. I had this one, but I like the fact that we had this down move right here from this high to this low, and you can see as it traded above, it left behind the inefficiency, which means on some time frame, this down move from a volume perspective is its own supply or demand zone. In this case, that's a demand zone. And in the future, once again, we will look for that zone to be mitigated to then be taken higher, which means we can confirm it. So what I did is I sent out that and said I will look to confirm it. This was the confirmation I was looking for. It's the 1 minute. So we had this low to this high, was looking for it to break down and then shift higher. Then today, this morning, I posted this, did not take this. I did not. So this is not the trade I took. I even said it. I said this is a forward tested with buy entry criteria. Didn't enter it. I reposted it because it's playing beautifully as per the bias, and I'm going to keep following the bias. Anyone during London should have murdered this. So yeah, this trade in here was during London. So I'm not awake during that time, so I wasn't able to trade it. I'm human, sadly, so I can't robotically trade every single pair. If I could, it'd be absolutely insane, but that's not how it works, which is why I love sharing this with people, because we're about to go through some of the student trades, which have been fucking abysmally good. But as the session starts, I got position in the long on that trade right here. So you can see this was the forward test. This was the actual live trade. Then we began the partial and manage it accordingly, right? And the actual trade and the reasoning for it is going to be broken down here. Just ran this high. I actually, after this video, will consider a potential close on this, seeing as it is Friday. If I get a run on this, I may just leave it open for the majority of next week. I'm okay with that because I don't see it gapping down here. If it does, I'll take that small loss on the mini partials or on whatever's left running on that. But I'll probably end up actually letting this finish its run because I'm very bullish on this and I want to see it deliver, right? But again, we can't ever be 100% certain. And yeah, this can easily just break down, right? That's perfectly normal. However, the expectation is still there. That's exactly what we're looking for. But now you're seeing how, we set up a bias, and from that bias, we go ahead and just follow it through. And because it's been bullish, it is bullish, and we're just following the bullish bias, we're able to get position like that. And then you go into like the trade talk right here. And I mean, it's absolutely insane what's going on. Started phase 2, have been killing it. That's amazing. Good for you, dude. Yeah, so Alex got position on the UJ, absolutely murdered the UJ trade upwards. Meant your treasure. Thank you, dude. I appreciate that. Learned more in the last month than I have in the past 8 months. Good job, dude. I'm very happy for you. We have OBE here, shorting EU. Looks like he got stopped on both of these, break even. Looks like he just said he went break even on both of them. We're going to partial at 10, yeah. So he got broken even on both of those, but again, he's in the sell bias and he understands why he's in it, right? We've been short on EU forever, right? Just so you guys know, we keep talking about this every week. We spoke about all these lows getting cleared. We spoke about how this was going to become a distribution. We spoke about how many people, even in the smart money space, are thinking this is an accumulation and how they thought this was an accumulation and this was an accumulation and this was an accumulation. But lo and behold, it's just a structural, but lo and behold, it's just a continuation structural, it's just a continuation structural runs on every single low over and over again. And every single one of those major lows just act as liquidity pools. That's where this idea of liquidity pools comes from. It's not the fact that there's like equal highs just randomly distributed in the market, right? Because a lot of people, even in the retail space, or the dumb smart money space, are trying to target these equal highs and these equal highs and these equal highs and these equal highs, right? And potentially these equal highs and they finally get hit, but then these equal highs and then these equal highs, and nothing happens to them because they're part of a protected move. They're not actually acting as liquidity. So those same people are making the same mistake that retail was making before. If you were a retail trader before and you were making the same mistake of forcing the same thing over and over and over again, and now you're a smart money trader or a dumb smart money trader, you're still forcing the same thing over and over again, just on the opposite side. And all you're doing is hurting yourself because you keep looking for the same moves without any regard or any thought behind, hey, what has price been doing and what's it most likely to keep doing, right? Exactly the same things that I'm teaching right here and as well as in my private mentorship, right? And if, by the way, you understand all this and what I'm talking about is getting you bored as fuck listening to, check out mentfunding.com for your funding needs. Prop firm, one step, no time limit. Just check out the model. If it works for you, then fantastic. If it doesn't, move on. But other than that, I hope you're enjoying this, right? So just looking at this, right, you just have absolutely insane. We'll have that gold name by the end of the week. So he'll be funded by the end of next week, apparently, is what he's saying. So huge congratulations, right? You can see the big UJ buys. How did UJ sell? Looks like it was a little bit of a higher lot because he was probably looking at a smaller hedge. You can see the very small loss despite the fact that it's a higher lot. So absolutely beautiful risk management and understanding of what we actually do. Yeah, so his 1 to 32, then stopped the break even, but he secured his partials. So again, same thing, right? That's what we're doing. We're trying to get positioned, let it run if it needs to. Otherwise, we're going to get partialed. And that's all, over and over and over again. That's me with my markup going long. This is wicked, absolutely murdering it, right? Same idea, same bias, same plan, same understanding, because it's rooted in the same thing. And if you're incapable of doing that, you're still looking at this whole thing as a distribution. And guess what? You might be right. You might finally be right that this is a distribution, but the likelihood of it continuing is higher. Why? Because it's been doing that. And you might have been thinking it's a distribution here and 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 here, and stop thinking it's a distribution if it's continuing to move to a given side. Be wrong at the very end of a trend and be correct every single time it actually delivers. That's what real trend trading is. It's following the move through and allowing the next high to act as the real liquidity, because most people are so zoomed in and tunnel visioned on this that all they see is this, and they go, there is no way this market in its right mind is going to keep going long. Let's short here. Let's short here. Look at all these resistances. Oh, what the fuck's happening? Okay, let's short this, right? Let's short this. Let's short this. Jesus, I can't even click. Let's short this. Let's short this. Oh my God, it's going higher. Let's short this, etc. Right? And it's just nonstop. Oh my God, let's short this. Let's short this. Let's short this. Oh my God, the short's working. Oh my God, the support resistance is holding. Oh my God, we're building a trend line, a beautiful trend line, right? Liquidated. And it's going to happen over and over and over again to you unless you start to actively make these shifts in the way you think. And using my videos, just like in the last one, you actively make that choice to now look at something and think, how can one impulse or one move change everything, right? Just like what may look like a distribution, just like this, needs one move to change it into a reaccumulation. This is exactly what's occurring almost every day in the market. Every high put in, you think it's a distribution, you're getting liquidated, it finally breaks down, you think it's ready to go, it's an accumulation, and you go, how did I miss that move? How did I miss that move? And smart money gives you those moves over and over and over again, right? The composite operator needs to mitigate some of those positions because it's part of the liquidity process. It's part of the mitigation and manipulation process that's occurring, right? So get used to the process, get used to seeing it, and then basically just execute on it. Not financial advice, of course. But that said, just absolutely completely decimating it and destroying it, right? We had it done for the day. Congrats, right? Just UJ, same thing, looking for the buys up, and there's tons of opportunities. The same 3-box opportunities with the same new S&Ds being set up the same way across timeframes over and over and over and over and over again. So, make the choice of whether you actually want to look for them or if you want to keep trying to catch, random highs or lows, looking for random distributions in random areas, because it's not going to help you, right? The way you find success in this market and actually start to build something for yourself is by, understanding where you are in a move, figuring out if you're in a markup or a markdown, and then following along with that move. If you're in a markup, great, follow the markup. What does that mean? That means you want to be following any new high that's created, find the S&Ds as part of that move as I teach you, and look to now liquidate that high. This is really, at its core, most of trading really comes down to understanding this setup pretty much, right? It's understanding that you get the breaks and you're able to shift your bias and you're able to confirm these points and you're able to just follow this down and through, right? Depending on where you are on higher time frames. Now, again, it's not going to deliver as beautifully as this. It never does, right? The delivery of this is more like something like this, right? Sometimes you'll get that liquidation, continuation, come back in for the smart money setup, and then move away and the break higher, right? And then as you're positioned in that, smart money is now actively positioned, or the composite operator is now actively positioned. You, one, could just get it come back and it's all good, or two, you get the explosion in the markup, which is exactly what I've been teaching you the last few weeks. So utilize this, make it part of your process. If you're confused or want to take this to the next level and understand it on a different level with other confirms that can get you positioned in very, very nice trades and very nice plays and make proper analysis, check out the mentorship that's available to you in the link below and on the screen. Otherwise, just leave a like, leave a comment, whatever you want to do, and click that little bell or whatever they like to say, and then you'll be updated when there's a new video, and you can check it out and you can mark up and then you can compare, right? Because all of this is the exact same thing over and over and over and over again. So yeah, guys, thank you so much for watching. I hope you really enjoyed that video, and I'll see you all in the next one, all right?